All right, I want to start a business, but I have no idea which one to pick and how they're all taxed. So, is it a sole proprietor, an LLC, an S-Corp, a B-Corp, a C-Corp? What effing corp is good for me and how the hell are they taxed? Well, that's what I'm here to try to explain to you today. David Jones, I am not a CPA. I am not a lawyer. You should definitely seek professional advice on this. I'm just a business owner that's launched 9 companies, each one of which in a different area and all taxed differently. So I'm just going to try to give you the layman's terms on what all this stuff means so you can make a decision what might work best for your business. All right, let's just start off with a sole proprietor. Now, sole proprietor, again, as we discussed before, is not a legal entity. You don't have to register it with the state or any of that crap. It's basically just you made an extra $20,000 in some side hustle and you have a $50,000 W 2 job, then you just made $70,000 for that year. You file your taxes, you pay your taxes, you're done. It's that simple. Now, what about an LLC? Well, LLCs get a little trickier, so I'm going to hold off on that one for right now. All right, let's just talk corporation, just a standard C corporation. Now, there are benefits to doing this, but there are a lot of complexities too. But let's just talk about the tax itself. So, C corporations are double taxed. What does that mean, right? So, a C corporation, if say they make $1 million, right, in profit, they will pay taxes on that $1 million at 21%. That's what the company pays. Now, what you're going to pay as an owner is whatever gets distributed in profits to the shareholders at that point. So if you own the company and you guys distribute another $500,000 in profit, you're going to pay taxes, individual taxes on that $500,000 through capital gains. All right, so it's a dividend distribution. So your company actually gets double taxed. Now, there are pros to it. If you plan on holding a company and retaining some of those profits to reinvest them in the business, this might be a good thing because you're only going to pay that 21% tax. You don't have to pay yourself, or you can pay yourself as little as you want through dividend distributions, and then reinvest the rest of that money, and it won't be taxed again until you start making profits on that growth too. So C corporations can be great. And if you have a long-term exit, if you're planning on building a multi-million-dollar business and you're going to bring in maybe some investors and sell shares of it and then eventually exit after at least 5 years, there are benefits if you're going to sell your assets or your stock if you wait 5 years. In that case, you're not going to have to pay this huge tax bill. So there are some benefits to doing that. But again, meet with a CPA, know your strategy, know what you want to do for exit to see if a C corporation might be the right one for you because it could be higher taxed. All right. So, S corporation, a little bit more simple, makes more sense for companies that are already making a steady profit. Okay, so what some CPAs have told me in the past is once a company, depending on the industry and how you're structured, but roughly as just a rule of thumb, if your company's making about $100,000 in profit, it might be a good time to switch or to either choose that entity structure in the beginning, or if you're an LLC, switch your tax classification to an S Corp. Why is that? All right. So an S corporation, you're going to pay yourself a salary now. So what happens is that salary that you pay yourself is a deduction for the company. You'll pay the personal income tax on that as you normally would just working any W-2 type job, but the company's tax rate would get reduced, which means that any profit that you share with yourself at the end of it gets reduced by your salary. So it becomes a way where an owner can reduce the profitability within a company and not have to pay what we're going to get into next are the self-employment taxes. All right. So LLCs that are chosen to be a sole proprietor or a pass-through entity or a disregarded entity. It means all these crazy things. I know it's stupid. They call it 3 different things. But all that means is that kind of like just the sole proprietor, if your company makes $100,000 in profit that year, then you are going to pay that $100,000 in profit. Now, even if you reinvest that money into something else, unless it was a deduction for the business, you're going to reinvest that money, but you're still going to owe the taxes on it. And the taxes you pay as a pass-through entity are 15.3%, what they call self-employment tax. It makes up for not paying Social Security and federal taxes and stuff. So it's normally what you and the employer would split if you were a W-2 employee. But since you're not a W-2 employee, you're going to pay a 15.3% tax of profit right off the gate. Now, again, this is after your deduction. So if you made 200 grand, but you had 100 grand in deductions, you're only going to owe profit taxes on that profit of 100 grand after the deduction. So just be clear about that. All right. Now, after basically the business pays for that profit, you would also claim that on your income. So you would pay whatever tax bracket you're in. If you're in the 10, 11, 20, 22% tax bracket, or wherever this money falls in with that bracket, that's the tax rate that you're going to pay for that too, which is why it makes sense that as your company grows, you might want to start to pay yourself a salary and tax yourself as an S-Corp, which you can do at any given year as an LLC. You can change your tax classification from disregarded entity or tax as a sole proprietor pass through to an S-Corp or even to a C-Corp if you wanted to. That's a great thing about LLCs. They're versatile. If you start your business as a corporation, you're a corporation, your tax as a corporation, you're double taxed from the beginning. There's no changes. Same thing with an S-Corp. If you pick S-Corp in the beginning and that's how you're filed, that's how you're stuck. LLCs have the ability to be taxed any way they want. So just take that into mind. I know it's a lot of information. I'm going to have this key components chart up over here for you just as reference. If you're in our school community, you can download that. I'll have it as just a JPEG or PDF, whatever, that you can download that. Simple enough. If you guys have any questions, if we're on YouTube, feel free to leave a comment or question below. I'm happy to answer it the best that I can. All right. So hopefully we see you over at the school community. Until then, stay profitable. We'll catch you on the next one. Bye.